Hi everybody, welcome to another update on the gold forecaster index, the holy grail to predicting gold prices. In my last video I said that gold would be flat, and you can see over 1 month gold is as flat as a flat pancake. So it's basically the same price. So I've predicted again what gold was going to do. Let's see what next month will bring. So for this, we look at the gold forecaster index. And what's the latest data point? Let's see. So for May, we have a tiny bump upwards on the gold forecaster index. You can also check this tab. This is also the gold forecaster index. You have this chart, which gives a faster data point using import-export numbers. And this is the gold forecaster index using trade balance. Okay, and you can see it's a little bit upwards. So based on this chart, I would say that gold will go slightly upwards next month. Not a lot, but slightly. Taylor roll rate is still the same. It's in an uptrend. That's good. Misery index, we got the unemployment rate today, which was at 4.1%. So that's down actually. So unemployment is not rising that much. So this chart is not going up yet, but we will see that it's not all that bullish either. So we will talk about that later. Okay, this is just alt data. ETF flows stable and pointing a tiny bit upwards, not a lot. GLD still making this inverse head and shoulder pattern. I think this will go higher. COMEX has been dropping. Let's see where this ends up. It's still dropping. That's not that bullish. Gold deliveries were up, but we are now in a new month, so it's back down. LBMA waiting for new numbers, but this is looking very flat and starting to bottom out. So that should be good for gold. China gold demand is lower. Same with India, but silver looks better. Yeah, there's more demand here. So yeah, this is not a good trend. We want this chart to rise instead of going down. So this doesn't make me bullish on China. So China needs to buy a little bit more than this. Silver demand is increasing, so that's good. Yeah, you can see that COMEX is still up, LBMA is starting to go up, SLV up. So it looks pretty good for silver. Silver demand here also starting to rise. SLV up, PSLV also up. Yeah, and silver is making new highs. Okay. COMEX silver, yes, is looking much better actually than gold. These are alt charts, secular bottom everywhere. And okay, so China did buy gold last month, but you can see the trend is a bit down. Of course, these are official holdings, but I think they secretly buy a lot of gold. And you can see these are official numbers, but their amount of gold is increasing, and they are selling treasuries. Okay. I don't have US Mint sales numbers because they didn't report it for this month. Premiums on APMEX keep going lower. That's not bullish. You want to see high premiums because that marks a bottom. This is actually not that bullish. So there's not a lot of demand from the West. Junk silver premiums are very low. So I don't think that these dealers can actually make money because nobody is buying. There's not a lot of premium. Shanghai gold premiums are around 0.3%. It's still positive. That's good for gold, but it's not as high as it was before, 2%. So you can see Chinese demand is waning off, which is not that bullish. Silver premiums are actually down on China. So yeah, I mean, it can overshoot like this. If this goes to 0%, then you can see an overshoot to $40 silver. But this is actually not bullish. You want to see this premium high and not going lower. APMEX gold premium is also very low, around 3%. So not that bullish. This is the COT report. We see open interest is still at the lows. We need to wait for this to start moving back up. Longs are getting more long. That's good. So it's not that bad yet. Swiss franc up, and real yields are positive still, but it looks like it's getting more negative. So this could be a boost to gold. This looks like it's bottoming out, going this way. So that should push gold up. Okay, this is important. We are currently in July, and typically this is the bottom, the ultimate bottom, July the 5th. Seasonally, this should be the buying point because the second half of the year is probably going to be bullish gold. Silver, yeah, silver as well is going up. So this is basically the buying point, second half of the year. Same with silver. Bullish percent index. I think sentiment has gone down a bit. Yeah, a little bit down. It's now average. So not bullish or bearish. Big picture, yeah, this still needs to go up more, 4,000, 5,000 gold to get to this point. And you can see that currency in circulation is actually rising again. So it's rising. That's bullish gold. 30-year to 10-year ratio is actually looking good. It's up. Yeah, the trend is up, so that should push gold up. Yep. Debt to GDP, yeah, debt is rising still, and GDP was going to slow down. That should also be bullish gold. More defense spending as well for Europe. So more deficits. So that means more spending and less revenues, which is bullish gold. In these periods, you have gold going up. Near-term forward spread, let's check. We want this to be negative, going into positive. Latest data, very bullish because this is very negative, minus 0.72. It was at 0.5, 0.6, now it's minus 0.72. So whenever this goes up, back in the positive, then gold goes up. We're still negative, which means there should be rate cuts coming. As you can see here, this goes up, gold will also go up. So that's bullish. I think this is the most important indicator. Okay, because this tells you if you are going into a recession or not. This tells you in which part of the cycle you are, in a boom cycle or in a bust cycle. And we are still in a bust cycle. Okay, from here to here is bust, from here to here is boom. So we need to get back to the positive, and for that, gold needs to go up. Rate cuts. Will we get rate cuts? Well, the jobs data was pretty good today, so probably less rate cuts. But when you look at this here, we actually went below the proxy Fed funds rate, is below the effective funds rate. So yeah, it's 50%, I think, that they will do a rate cut or not. I still think there will be rate cuts. So let's see the projection. The 2-year starts to go down. Yeah, I think the Fed is late. The red line is the Fed funds rate, should already be somewhere here. So they should cut rates this year until up to 3.5%. So currently it's still at 4.2%, should go below 4%. Okay, that's the estimate. And when they do that, when they do the rate cuts, then gold goes up. Foreign gold deposits are still the same, nothing happening here. Borrowing fees had a tiny spike, but then the next day it was gone, so nothing to see there. Gold futures curve is still pointing up to 4,000. And silver as well, going to 40. So very good for gold and silver. Fundamental value is still up. So let's see. A very nice website that you can look at. So there is the gold fundamental price that you can look at. And currently it's pointing to 3,700 gold. So that's about 10% higher, right? Yeah, that's about 10% higher. And here you can see it's indeed 10%. If you look at it from long-term perspective, every time when we are at minus 10%, it goes back up and gold goes up. So here, the same, gold goes up. So here, I expect the same to happen. Gold goes up, okay? So I'm still bullish long-term for gold. And this should actually go, let's say, from here to here, here to here. That's about 50%, okay? 50% rise. 1,500 to 2,000, yeah, that's about 50%. So from 3,300 up 50% would be 5,000, 4 to 5,000, okay? So keep that in mind, 4 to 5,000 gold in a few years from now. DXY is still cratering. I think indeed we could go up 50%. If the DXY goes down 10%, gold could go up 50% from here to here, okay, in a few years. Geopolitical risk, yes, there is still the geopolitical risk in the Middle East. So let's look at some of the fundamentals. Central bank balance sheets. I think QE is going to start because liquidity is pretty low. You can see the ECB is already starting QE. US will follow. For that, they need to first cut rates, and this needs to stop. So they need to stop decreasing the balance sheet. And I think it will happen at one point when they don't have cash left. And we're almost there. At some point, there won't be any cash left in the Treasury General Account, which is this one, the purple line. And the purple line is starting to drop. So in a few months, this will be around 0 and they need to stop QT. Let's look at liquidity. So this is the overnight repurchase agreements. And you can actually see something happening here. A tiny spike in overnight repurchase. That means that there's a liquidity problem, but it was just one day, I think, one or 2 days. And now it's back to 0. So watch this space. If we get something like this, then there is a liquidity crisis coming. But we're not there yet. This is just an early sign. And that's because cash is dwindling. They need to restart QE at some point. That's bullish gold and bearish the dollar. Okay, so that's why everyone is now short dollars. Let's take a look at the deficits. I'm curious to see what is happening here. Okay, so we had a spike in deficits, then unspike, but now it's spiking back downwards, so more deficits. And here, yeah, it's getting back this way. So you need to take the average of these 2 points. So we should be somewhere here. So it's still going down, which means more deficits. And services are flat. Yeah, these data points. Okay, so this one is actually going down and this one is going up. The blue line is up. So taking the average of this, it's still a bit negative. So yeah, overall, I think the deficit will keep on rising. Export price. Okay, still a deficit gap. Yeah, this is Q1. More imports, less exports. So more deficits. And here we have deficits vs the US dollar. So this trend is still going lower. So I expect the dollar to keep dropping. And that's bullish for gold. Okay. Let's see capacity utilization. What is the latest data here? Actually down. So the economy is not doing that well, but less inflation. Actually also want to look at the inflation rate to see if we are not getting in deflationary territory because that would not be good for gold. You can see the Michigan one is still up, and here we are stable. So inflation is still here, which is good for gold. It's actually pretty stable. We are not seeing something like in 2008. So in 2008, we actually had a drop in inflation. You can see here, 2008, it dropped to 0. That's not happening right now. Right now, the inflation rate is pretty stable. Okay, so I don't see any problems with gold or silver because this line is pretty flat. Okay, so that's good. I wanted to take a look at the jobs data a bit. So everyone is talking about unemployment rate is going down to 4.1%, but look at the labor force participation rate. Labor force participation rate is actually dropping. So since 2000, it has been dropping, 2008, dropping to 2020, and now it's still dropping, and this is the latest number. In June, we are still dropping. So if nobody is in the labor force anymore, then of course the unemployment rate goes down because those people are out of the labor force and are not counted anymore. So this is actually more important to look at. If this keeps on dropping, that's actually not good. That's a bad labor market. Nobody is in the labor force anymore. On to some other charts. And this was a nice one. If you buy stocks, you will lose 6% per year for the next 12 years. So I'm not buying stocks at this point because there's no return. And this is a complete overvaluation. Yeah, the market cap is much too high. This should come back down. What I'm buying is, of course, gold. And this chart says it all. Whenever you see stagflation in the coming 12 months, then gold starts to rise. And here as well, gold starts to rise. And here we have another spike in stagflation expectations. So gold should go to 4,000. Okay, just look at the historic data. Some more data on gold. I found these are very nice charts. So real rates are actually positive now, but that's not bearish because you can look at this. This chart goes up and down together. This is bottoming out. If this goes back like this to negative rates, then gold will soar up. This is a more short-term chart, up, down, and probably the cycle will be up again, going to negative real rates, and gold will go to 4,000, 5,000. US dollar, so this is the inverted US dollar, is going to drop, so going up, drop to probably 80 DXY, and then gold will probably go to 5,000 or higher, 5,000, 6,000. Okay. Then you see here the miners are pretty cheap compared to gold. Once gold starts to rise, these miners are going to have leverage. 2 times leverage, some have 5 times leverage, and there is even a company that has 10 times leverage. So if gold goes up, then you you are going to see the gold miners outperform gold with the 2 to 10 times leverage, and then this chart should rise. Okay. So for this to happen, we need gold to go up, of course. And gold miners to S&P, of course, this is overvalued. Gold miners are undervalued compared to gold. So this should also start rising, this ratio. So how do we prepare for this? We need to buy, of course, the gold miners with the highest upside and the highest leverage. And on this chart, you can see Soma Gold is pretty good. So we have an upside of 200%. That's 3-bagger. And it has a leverage of 7 times. So if gold goes up, let's say 10%, then 7 times leverage is 70%. So gold up 10%, then Soma Gold will go up 70% on top of this upside. So this is 200% upside currently at the current gold price, which is 3,300. Is already a 3-bagger. If you buy it now, it's going to 3-bag if gold stays at this level. However, if it goes up, if gold goes up even more, 10%, then you can add another 70% on top of this 200%. So 200% plus 70% would be 270%. Let's say 300%. That's 4-bagger. If gold goes up 10%, you get a 4-bagger with Soma Gold. Okay, so that's how we calculate this. Jaguar Mining is second. Then we have Step Gold. Mako Mining, Mineros are all very good. Integra Resources has a lot of gold in the ground, but they need to get it out of the ground, of course. But yeah, it has leverage because of the resources. Serabi Gold, also very good. And then we have lesser leverage, Monument Mining, and then B2 Gold. And you can see these are having less upside. So of course, we don't buy these ones. They have only downside. Lundin Gold overvalued, Agnico Eagle overvalued, Almas Gold overvalued. Avoid these and buy these because you can buy a basket of these. Plenty of leverage. Leverage is much higher than these ones. And more upside. Okay? More upside and more leverage. Okay, so that's how we play it. And overall, I think for this month, yeah, it's July, so we should be bottoming out. I think gold will be up by next month. Not a lot, because there are still bearish points that we saw in this video. But seasonally, we should start to bottom out now and go higher. So let's take a look at this seasonal chart again. Where is my seasonal? There's so many charts here. Okay, so this one. We're in July, going into August. We should see a tiny bit of upside for this month. So don't expect too much, but it should go up. Okay, and I'll see you in the next video. Bye.